Hello everyone, Colby the DGI Crab here on a Thursday, here to proudly announce a new DGI Crab series. This is one I plan on doing about once a month. I haven't completely decided on exactly when the timing of it needs to just be at this point, but in all likelihood, this is probably going to be a monthly series that I'll do in the first week of each trading month on a go-forward basis. And we're talking SPY versus SPYI. The idea with this series is I am going to invest $50 a month into each of these two ETFs to see which one performs better. The growth of the S&P 500 versus the high yield of SPYI to see which one will come out on top. So this is one that I am going to be doing in my SoFi account. I have a tab set up here for it. I made my January contributions to this last week, $50 each, SPY, State Street S&P 500 ETF. This is the oldest of the S&P 500 ETFs out there. Now, you all probably know by now that my S&P 500 contributions typically go into VOO, Vanguard's version, primarily just because it has the lower expense ratio. But SPY versus SPYI just has a nice ring to it, right? A little bit better than VOO versus SPYI. So the S&P 500, if you're not aware, has a very long history and track record. And the average growth rate of the S&P 500 throughout its history of more than a century now is about 11%, give or take maybe a few basis points. The yield on the S&P 500, however, especially here in modern days, is not particularly impressive. You can see here SPY yields 1.19% currently, whereas with SPYI, the NEOS covered call S&P 500 ETF currently yields just shy of 12%. So I thought that this would be kind of interesting because the S&P 500 grows on average 11%. Well, if you've got this income generating fund that yields even better than that, then if you are not living off of that income right now, you're just reinvesting all of the dividends into the underlying ETF that pays them out. If you're getting better than 11% on the yield, then perhaps over the long haul, that yield might give you more growth to your overall account than just the pure share price appreciation with lesser yield that the S&P 500 offers. So there's going to be some some debate amongst which of these is the better one to have, and obviously this is an age-based investing channel where time horizon is what I believe is the most important thing for an investor to keep in mind when they are making their investments, especially a dividend growth stock investor. Now, I'm not a licensed professional, so don't take anything I'm doing as direct financial advice. But I think that this is going to be an interesting competition between these two. Now, that being said, regardless of how it comes out, if this is fairly even, let's just say, after a few years, this isn't going to change my opinion on the idea that the S&P 500 is a better investment for a young investor with a lot of time in the market. While something that generates a high yield like SPYI is going to be a lot better for an older investor, especially an investor that is very near or even at the point where they can live off of their dividend income. A big part of that is tax implications, for one. So let's just assume for a moment that I go through this exercise and about 5 years later, the overall value of the two investments is roughly even, within a percentage point or so maybe of each other, where I've got the growth of the S&P 500 being way better than SPYI, but the yield and reinvested dividend income from SPYI greatly outpacing the S&P 500. Let's just say that those two factors are about even. Well, something to keep in mind is tax implications. SPYI, fairly tax advantageous on the yield. However, you're still going to be paying some taxes on your dividends, even if you're just sitting there reinvesting them, not taking them out of the account or anything else. You are going to pay some taxes on your dividends. You don't pay taxes on share price growth until you actually sell the shares. Therefore, over the course of many years, if let's say I was a 23 or a 24-year-old investor doing this, I would be paying out more in taxes year over year over year, thanks to the large dividend yield of SPYI, than I would be by just enjoying the 11% on average share price appreciation of the S&P 500, because I wouldn't be selling it. So that is something to keep in mind as you're going through this, and it's still one of probably the biggest reason why I do think if you're young, you should just go with S&P 500 for that growth factor. And when you're at or near the point of living off dividends, SPYI could be a really good option for you to generate a high monthly yield. Just to compare the two in seeking alpha, so you've got we'll start with SPY, the S&P 500 ETF dating all the way back to inception in early 1995. This is up 1,171% lifetime, up 189% on the 10-year chart, up 78% on the 5-year. And because we've gone through a very hot 2024 stock market, up 24.5% over the past 1 year. The yield, as I pointed out before, right now is just 1.19%. If we take a look at the dividends tab, growth rate will be pretty similar to VOO as well. 5-year growth rate of about 4.69% on the yield. So we've got low dividend yield, fairly low dividend growth. Pretty consistent. SPY has paid out a higher dividend for 15 years running now consecutively, but not necessarily a great dividend income themed investment. I've said a few times the S&P 500 is arguably the worst dividend themed investment that I make. Now, I do want to still have exposure to the growth stocks that are contained within the S&P 500 that I would never consider individually as a dividend growth investor. Stuff like Amazon and Tesla, just to name a couple right off the top of my head. There's plenty of others out in there as well. But you kind of get the idea. Definitely more growth oriented. So now if we take a look at SPYI, very high yield that pays out monthly, yielding just shy of 12% currently, and SPYI has now a 2-year dividend growth streak going. 5-year growth rate isn't even registering yet, and the reason for that is because SPYI still relatively new in the grand scheme of things. SPYI was launched, let's see, back at the end of August in 2022. Neos is still a fairly new company at doing this, but I have been pretty impressed with the products that they have been putting out over the last few years. When I started the channel in the summer of this past year, SPYI wasn't one of the stocks that I considered for the tier 4 income-based dividend investors in their mid-50s and older. And as I compared it against similar ETFs like JEPI, JEPQ, and some other ones, there was just no denying that this one has performed quite well since inception. You can see here it started out at $49.13 a share, and over the last 2+ years, it has grown a bit, up now to $51.37, even reaching a high point of about $52.50, give or take. So not incredible share price growth, nothing to get super excited about, but if this thing can grow its share price by roughly 2% a year, while also yielding between 10 and 14%, depending on how the call options are going at any given time, then this is a really nice investment. Again, better for an older investor that needs to live off of that dividend income now or in the very near future. Again, mostly for tax considerations, mind you. But I definitely think that this one is showing a lot of promise so far. It's not trading completely flat. We're not seeing NAV erosion, meaning we're not seeing share price decline, just so it can pump out a really impressive yield, like that yield max trash that people on YouTube are just making all these videos about, getting all excited about, and honestly, most of them just losing their money and encouraging other people to do so. Definitely hate those funds, and really most of the high yield stuff I really don't like, but this one has proven to be an exception, and we'll see how it goes over time. But as I said at the beginning, my plan is to give you all a monthly update on how this is coming along. I've received no dividends from either of these because I just started this, like I said, about a week or so ago, made that first initial $50 investment into each of the two funds. And the plan is to do that at the beginning of each and every month. Based on the history of SPYI, they generally tend to go ex-dividend towards the end of the month. So I will be making my investment probably about a week to 2 weeks after they go ex-dividend. I'm not really worried about timing that necessarily. But I think that just scheduling wise for my own dividend investing, the beginning of the month just makes the most sense for me in order to make that. And I wouldn't want to do it like around the 20th or the 21st, because there'd be some months where I invested after SPYI went ex-dividend date and some other ones where I did it before. So by doing it this way, I know for sure that I'm going to be investing kind of at the midpoint of when this monthly pair is going to go ex-dividend. So that should all be pretty consistent. And then for SPYI, very similar to the other competing S&P 500 ETFs, this one's going to be a quarterly pair, and generally it's going to go ex-dividend in the middle towards the latter part of the third month of each quarter. So again, this will be one where if I'm making my investments in the first week of the month, it shouldn't have any weird overlap with my monthly investment going in and then a ex-dividend date maybe being just slightly missed. So I think I've got the timing of this figured out pretty well. Let me know what you all think in the comments, what you think about the concept of investing in the S&P 500 or in a covered call ETF like SPYI. Which one do you think will do better? Do you think they'll be relatively even? Give me your 2 cents down in the comments below. Do you invest in either of these ETFs? And let me know what you think about the series. Probably don't need to do this more than once a month, but definitely worth checking in on it just to see how these two fighters are going to duke it out in the ring and see which one is going to come out on top over the long haul. And actually right now, SPYI has a very slight edge on the overall value despite not having any dividends paid. So maybe you could say SPYI got the first jab in before any dividends have even been paid out. Just kind of have to wait and see on that. All right, you guys, email me questions, djicrab@yahoo.com, and I will see you on the next video. Let's go get that passive income.